Good evening, friends. Nalnakshi Swami here. Welcoming to my channel, Smart Index Edge. Someone in the comment section asked me, Madam, how to make 50 points in the index. 50 points. In Bank Nifty, it is very easy to make 50 points in the because its move is sometimes more than 200 to 300 points. Sometimes even if I measure here, this is totally this one, 1600 points. 1600 points, you can make very good money. For that, you need to make preparation. See, I'll start from this. I have drawn vertical line. I'll start from mapping the market. You have to map the market. You have to see whether the market is in trendy structure. See, if I go on seeing this, it is in trend, right? So that is a trend breakout. So if I map this, it's a trendy structure because it has come out. So I am going to take this tool and I'm mapping this, okay? These are the major things. Later, what happened on the next day? It started coming down. How did it come? See, it was a gradual down day, but the structure was not violated. How? This was the structure. It made a high, it made a low. It came down here and made equal low, right? So this was the structure, trend structure. If I take a draw, this is the trend structure. This was the high. Let me mark it as an high. And it is low. Okay. So always be on the 15 minutes. So if you are on the lower time frame, you cannot make out the structure properly. You can trade only in, you can scalp it only for 10 points and 20 points. Okay. On this day, see, this was the close, right? This was the 15 minutes close. What happened? First 15-minute candle, it gapped up, right? When it gaps up, you take this, again take this tool and mark it. What is the structure? From here to here, it is a trend. It has made a higher high. This was the lower high, higher high, right? I'll zoom it out. You have to observe the market properly. This is lower high, lower high. If I draw the trend line here, it is a breakout of the structure. It made an higher high. Then you need to wait. Actually, immediately you should not jump into the market. Why you should not jump into the market? So you have to think which candle was responsible for this high. Which low? This was the low. This low is responsible for this high. So you measure it. How much points it has gone? From here, 480 points it has gone. Okay, it is a swing, 480. Suppose if take the flip tool, and mark it. Take it from the low to the first 15-minute candle high and wait patiently. See, why you have to wait patiently? Nobody buys when it becomes expensive. Always you need discount. What happened here? If I take the tool, this was the only 0.38 retracement. And later, another 15 minutes candle showing a reversal candle, strong reversal candle. Again, this candle is, okay, making a lower highs and changing character. It made a higher high. So now you are confirmed that market is going to go up, right? Market is going to go up. Then change your time frame to 5 minutes. So mark this high, mark this candles high and mark this candles low. Which was responsible for the change in character. Okay. So go to the lower time frame. Let me go to the 3 minutes time frame here. You can see trendy structure over here. So where you are going to take? You are going to take the trade break of this level, right? Before that, it has corrected. So the trend structure has confirmed. It made an high over here. After gaining experience, you can track the market in an here itself in the lower time frame itself. You can gain entry. How you can gain entry? See, here it was making lower highs, lower highs, lower highs, lower highs. All of a sudden, it is a big higher high. When compared, and this candle is a, so you can enter, even if you change the time frame, you can enter at 48,500. Okay. 48,500. You are entering at 48,500. Say, for example, how we are entering? Only after the trend formation and reversal, discount, and discount confirmation with the reversal, you are taking the trade. Say, for example, you have entered at 48,500. So next year, what you have to keep is, target is, you have to measure the move from here to here. Okay. Here to here, swing 477 points, right? So you can anticipate from here 477 points in the Bank Nifty. Okay. 477 points. Within that, there will be lot of corrections were there. Maximum you can anticipate. You can take the fib tool and put a fib from top to bottom of the swing here, and you can anticipate 48,300. So around 340 points. Say, for example, you have selected the call option to go long. Which call option you are taking? So you have selected 48,500 call option. I don't know the price. Suppose you have entered here 48,506. After the confirmation, you are anticipating 233 points. Okay? 233 points. Suppose, say for example, it is trading around 48,500 call option is trading around 400 rupees. If it is trading around 400 rupees. 400 rupees. Okay. And your target is how many points? 233 points. Your target is 230. Anticipation is 233 points. For the rise of 233 points in the underlying, index, you will get only 100 and half of it or 0.75% rise will be there. For 233 points, you take 233 points divided by 2. You will get 116 points maximum. So you will get, when it reaches 400 to 560. So you calculated 400 should become 560. 560. Sorry. 560. So you know how many points you got? 100 points. Right? 400 rupees trading this. It is a safe way once you identify the trend structure. That's all. See how much it can go. You have to calculate the target in the index. And when the trend is confirmed, you can anticipate more than that. Because swing has started over here. When the swing has started over here, take the fib tool from here, or you take the equal measure, consider it as an equal measure, and see, you anticipate this much in the market. On that day, it was 1:2. See, 1:2, and even it went, let me draw a line over there. Nobody can anticipate this much. See, it went up to, if I measure, it was more than that. 1:3, more than it comes up. No. It stopped. It halted as 1:3. Here, it halted at 1:3, and the next day it consolidated. You can see the consolidation. Consolidated, and it shot up in the afternoon and it plummeted, right? This was probably expiry day. Even on the expiry day, for example, you know the trend. So you try to map from here. Alt V. Even the difficult thing, you can do it. Okay. Here, the trend is up. How did it go? Trend has gone like sideways. It is not a straight up. Okay. Now, the opening on that day, on 30th, it was down. It went down, but trend is up. So you have to mark all the lines, all the trend structure. So from year to year, you are measuring the trend. So it is making an high, high, high. It was a difficult day. But you could have taken trade from here. You could have anticipated for the higher. How much you can anticipate is, from this move, you can anticipate this much move in the Bank Nifty. Okay, that is 254 points. You see what is the price of the underlying. For example, you have selected 49,353 is the level. You can select 49,300 call option. Okay. For the 254 rise, you can anticipate half of it. Sometimes if there is a momentum, almost 0.75%, 0.75 also you will get. 0.5 you will get, maximum 0.5 will get, because market goes up and down, only 50% of the, if 254 is raised, you can get 125 points easily. So you have to keep the stop loss. So let me go to the same call option chart so that I can show it to you, because let me duplicate this. Duplicate it and let me go there. Click on this. Okay. Already expiry is over, no? So 8th May we are getting. So let us take the example of today's. Let us go there. Okay. Today's trade. Okay. It came down. Our boundary area was here. So this was the trend structure. So what happened that day, on the expiry day, it fell. Okay, it fell. So you wouldn't have cashed this first candle. You have to wait 15-minute candle. I'll go. First 15-minute candle, it was a high. You couldn't have taken trade today, but even in spite of that, you could have taken trade. So it is a opposite direction trade. So how much you can expect? First candle, you measure from here 286 points. Okay, 286 points. So what is the trend prevailing is a downward trend, isn't it? So wait for the reversal. Okay. See, market went up to 15 minutes, 20 minutes, 30 minutes and 1 hour. After 1 hour, put a vertical line. So what is your bias? Market can go down, right? So you have to take position in the opposite sides. When you think it is here, so market start. First candle high, and it could not go past this double top it has made. There, on the 15-minute candle, you can even the rejection bar is also sell off. On the 15-minute candle, if you see the rejection, then change your time frame to 3 minutes. Okay, 3 minutes. Here it came down. See, what is your trade should be towards the downside, not the upside today in Bank Nifty, because it could not trade properly. Even it could not see it in this. Even it could not go up to this minor substructure, right? So this becomes the resistance because it is sell-off. If it would have gone up like this, instead of that, if it would have gone, you could have, see, your anticipation should be to the 49,681. It didn't go there, it stalled. When you saw this, it is going to stall, you can see here in this candle, 3-minute candle, you see rejection of the price. Okay. rejection of the price. When you see the rejection of the price, and also when you see this type of big candle, so your target will be not much actually. It shows that a big institutional candle. This is a big institutional candle. By seeing this candle itself, when it starts reversing, the market will be in a range. You have to make an assumption. It comes with practice. It comes with practice. It comes with continuous chart reading. So when you saw this rejection candle and then the second candle, let it finish 3 minutes candle. So it is a failure candle. It tried to go up. It is a bullish candle when it opened, but tried to fail and it closed below the opening price of the 3 minute candle. It indicated that price will start reversing. Okay. So what should be your target? Because since it is a big institutional candle lying there, probably this should be your target. So you have taken, for example, 49,000. Okay. We will go to 49,600 put option. 49,500. Doing that. 500. Let me type it. 49,600 put option. Okay, we are getting it. Okay, I'm applying. Today's trade, no? Let me go to 15 minutes. Today is 2nd May. Yeah. Yeah. Okay. Here, the put option came down to 480. Right? So your target is to this top. That's it. Okay. Here it was, so you have entered by seeing the reversal. You have, say for example, you have entered around 481. So what are you expecting for the fall? You are expecting how many points? 265 points in the Bank Nifty. That is to the level of 49,240. 260 points. So you have entered here. From here to here, right? We cannot enter exactly at this. Here to here, this is an aberration actually. Price cannot go like that. See, 11:30, okay? And the low came around 11:30. Yeah. See, because of the, sometimes 100% you can see. But you should anticipate for 260 points rise. You can anticipate for 130 points target in the Bank Nifty. Okay. From here to here, you are anticipating 130 points. Already you have entered 72 points already gone. Okay, 66 points already gone. Only you are getting only you can anticipate for only 50 points in this. So when you have entered around 481, market 481 plus 60 points is equal to 541. So you can anticipate the target of 541 in the market. So let us see, this is the level. You can anticipate for 540. So you are fixed actually. You are getting 50 points in a worst consolidation day, even if you trade properly. This is a range day. If you could have entered properly, even sometimes by practice, even you can enter at the lowest level also. You could have entered at 453. You can capture 50 to 60 points. But on such days, on this type of day, the first candle, even the first 3-minute candle, I'm showing it to you. This is a big institutional candle. When first 3-minute candle is such a huge, then you should understand this is an institutional candle. Institutional people will manage the price within this range only. They have managed the price within this range till 11:15. See how the price has gone sideways, and only it was able to come down this much. So on this type of day, better avoid. One trick is when you see, I'll change the time frame to 15 minutes. When you see these type of candles, manipulation candles, there are wicks on the, upside and downside. Upside, downside. There is no, let me remove the drawings. And when you see this type of candles, do not trade. See, even on expiry day, there was lot of whipsaws, and yeah, this was expiry day. Why it is coming like this? Any change? No, it's India only. On the expiry day, lot of whipsaws. This is a big range candle, and the market kept within this range only. See, first big candle. The next one is a red candle of the same size. Price was managed within this range, and if you would have seen that 49,500 call option came down to 50 rupees, 55 rupees. From there, all of a sudden, you can see there was a jump. Here, there was a reversal. Reversal also you can see over here. All the reversal till that time it was making lower low in this range only, lower highs in this range only. There was change of character and one single bullish candle around 145, and you can see such a huge, this is a pump and dump candle, and they pumped it to almost that 55 rupees, 49,500 call option jumped to 494. It even went up to 495, 500 like that. Later, same put option here, it started coming down. Coming down. Nobody would have expected such a vigorous sell-off. After such a vigorous sell-off, market has consolidated. You can anticipate that. See, this move was exponential move, and this was exponential fall. So market usually consolidates like this. If I go to the daily chart, you can see a dozy candle over here. dozy candle. Now, how will you analyze? How will you take trade for the coming day, tomorrow? So on the 4 hours chart, you should go to the 4-hour chart. 4 hours. Let me remove the drawings. You should start mapping the market. So you should identify the trend. This is the big trend. Okay. Now it has gone up. And this is the big trend. It has gone up to this. In this big trend, this is the breakout. So you have to mark this level. Okay. What is the structure? Trend structure. Trend is intact in the bank nifty. Okay. Here it consolidated. See, you couldn't have traded actually. Probably people might have lost money on these days. When market goes sideways, there will be a lot of manipulation in the option premiums. So neither call option, put option will increase. So trend structure, breakout and retest here. Market has retested this level and it's a big bullish candle. 2 candles of retracement you have seen. Here, this is a huge big move. Huge big move. After the huge big move, you have seen how many? 1, 2, 3, 4, 5, 6, 3 days of consolidation. Now, Bank Nifty undergone through 2 days of consolidation from here, right? From here to here. So take the flip tool, and apply from this swing low to the swing high. So what should be your anticipation of the retracement is of the trade is 0.5%, and this is the break of the structure, and 0.61. So mark those levels. 48,826. Let me make it dark. 48. And even in case, worst case, if it comes down to this level, in between 0.618 to 0.718, you can anticipate 48,612 on the bank nifty. So tomorrow you may get that. Suppose if it gaps down to this level, immediately you will get an opportunity to go long in this. Or otherwise, it can correct like this in a slow manner. Even on Friday, it can make a dozy type of candles, a range candle it can. So, what is the range from here to here is 355 to 500 points. So you are getting maximum, you think it is a 355 points. From here to here, how much it has corrected? 500. Yeah, 800 points. Suppose if it from here, you can anticipate 800 points. In that, it has already corrected this much. 400. So you can anticipate 467 points range in the bank nifty correction. Suppose, for example, 48,000, say for example, 48,800 call option. Okay, let me go there. You can prepare like this. You have to prepare like this. 48,800 call option. Now it is trading around 770. Okay. Where it has closed 760. Say, for example, if it starts falling, the index starts falling 400 points, then what should be the price range? So minus 200. 725. It may not be exact actually. You can anticipate. It can even go more also. When it starts in the beginning, 100% also you can get. So you can anticipate maximum 500, see, it is 200 and 400 points. Let me clear this and write down 400 points divided by 2 is equal to 200 points. You can anticipate. So you can anticipate the premium to come down to 558. Suppose if it, another, 25% more means you can add 100 points here. Let me drag down this to how much is 227, 100 points, 300 points. Okay. So you can anticipate 482, 400 and, 400 to 500 rupees decay in call option. Decay in call option. Okay. You can anticipate price to fall over here. And if it starts reversing like that, from here to here, suppose if it starts reversing, you can get 200 points. So you have to calculate how much points it can fall beforehand itself by marking the anticipating the levels. So if you are anticipating 467, we do not know how much it is going to fall, at what level the big player wants to stop and reverse. So on the live market, what you do is simply take this tool. This is the price range tool and measure the fall. Or otherwise, in your broker terminal, it will be constantly showing how much it is falling. Even if it is gapping down, it is showing how much it is going to gap down. When it is gapping down, you can anticipate this much fall in the premium of any call option or the put option. Put option you cannot take because if it gaps down, you cannot enter into the put option. You have to wait patiently for the market to settle. Suppose if it doesn't fall immediately, for example, if it doesn't fall, only if it falls only 208 points, wait for the retracement and go short because correction is not complete. Only around this area you will get discounted price. Even the big players also they want discount and they will enter into the market. So this is how you can plan for the 50 points, even 100 points also, if your entry is proper. So start marking the trend structure, swing structure, identify the swings and start even identify the substructures also in the market. For example, if I go to the, this is 4-hour time frame. If I go to the 30 minutes time frame, you can identify substructures also. See, you can identify this is the substructure from here. We need to, because it was a exponential move, we are not. So this is the range. Sorry. This is the range. What did it do? It had gap down below this range, right? Gap down below this range, and there is a level. You can clearly see there is a level. Market rallied and it has dipped. So it has shown a trend structure from here because market has gone up. This low is very. Market respected this low and turned around. From up to where it did it rally, only 50% of this block from where the market had flipped to the upside, and it acted as a flip zone, acted as a resistance. So you saw a double top resistance over here, and they have created a liquidity zone over here, and also it is an imbalance. Suppose if market comes to this level, you can anticipate market after reversing. Sorry, after reversing, let me take this part. Sorry. If it after gapping down, it can easily go past this level. It can easily go past this level. Wait for this level. Wait for the proper level, discounted level, so that you will get. Do not trade in this choppy, so that your entry will not be proper. You may not get 50 points or you even 20 points also. You may end up because it will be very choppy. You can see the candles over here. You can see, if you see the candles over here, all manipulative candles. Not even a single bullish candle is there. Not even a single bullish candle there. See, from here you can see higher high making candles. Even though they are small, you can see higher high making green candles and big green candles and only few red candles, and the trend has continued. And in this area only market shown choppy movement. That's why the market was very choppy, and that's what I explained it to you. 49,500 call option came to 55. So they manipulated so thoroughly. It was an expiry date. So either side, finally, 49,500 call option ended with zero. After rallying to 494 points within 1, 2, 3, 45 minutes, it came down to zero, So wait for the proper swing lows. Do not try to trade the substructures. Okay. So this is the proper trend. Trend low, swing low. It has culminated here. For this swing low, 50% discount comes around this level, 48,836 or 40. They can even halt at 49,027, exactly at 0.5% of the fib retracement. There is a level over here. There is a level over here because market after running up, it has halted. Halted means there are two red candles over here, you can see. So there is a level. This level is also important. They may halt around this 48,950. This is how you should practice. You should beforehand itself see what is the trend prevailing in the market, what can happen. So the trend is negative at present, even though in this bullish swing up move, this move is negative, this substructure is negative. Okay, so in this substructure, you can anticipate the initial until it reaches its target. You can anticipate for a negative move only after a proper reversal point. If you see a proper candle, you can see such a, if it comes tomorrow itself, if there is a reversal, if you can get the reversal, or they can trade like this also, like a dozy candle, 300, 400 points, they can trade like this. Who knows? Even on Friday also they can trade like that. So they may end up the market near the low, and they may leave it, and they may gap up also. That's what happens for the retailer traders. They will not get an opportunity because they fear to hold the position overnight. I hope this video will help you to mark. So prepare yourself before any trade. So easily you can get 50 points, even more that, and you will have confidence to hold any position, even if it is, because it is very volatile. The option premiums are very volatile. But beforehand itself, you calculate how much range it is, how much fall you can anticipate, how much rise you can anticipate, then your trade will be profit. Thank you very much, friends. Narnakshi Swami signing off.